Hi, welcome to my channel. In this topic I will talk about how subledger accounting can be used to configure a subledger accounting method for cash basis accounting. As we know that in some instances organizations have a need to report on a cash basis accounting method, even so cash basis is not a generally accepted accounting practice. Definition of cash basis of accounting. The term basis of accounting is used to describe the timing of recognition. That is, when the effects of transactions or events should be recognized. The Governmental Accounting Standards Board, as GASB in Statement 34, defines the cash basis of accounting as revenue are recognized only when cash is received. What about expenses? Are recognized only when cash is disbursed. So this is the cash basis, that there is no any accounting entries until the revenues or cash is received and expenses cash is disbursed. Because cash basis accounting is not a generally accepted accounting principle, each organization's version of cash basis might differ. The intent is to provide general guidance on how to achieve cash basis entries, utilizing the subledger accounting rules within Oracle Cloud. Each organization will have to tailor the rules to meet their accounting requirements based on their configuration options and the types of transactions or features utilized. Understanding when a cash basis ledger should be used. As we said before, that organizations don't use cash basis as their main basis of accounting because it's not recognized as GAAP as a generally accepted accounting principle. Commercial entities governed by the Financial Accounting Standards Board (FASB) use the accrual method of accounting. U.S. public sector entities use modified accrual and accrual accounting for their basis of accounting. International public sector countries have adopted International Public Sector Accounting Standard as IPSAS, which is based on accrual accounting and encourages countries to move away from cash basis. Private business can occasionally require the need of cash basis ledger to support internal reporting requirement. As you see here in this following is an illustration of accounting method used for commercial and public sector entities, the governing bodies of the accounting method, and organizations who use those methods. It's recommended to use a cash basis accounting method when the organization requires a balanced set of books on a cash basis to meet legal reporting requirement. It's not recommended to implement a cash basis accounting method when only some specific transaction types needs to have revenue recognized on a cash basis. In those cases, look at utilizing revenue contingency rules to facilitate the recording of revenue when the receipt is entered. So in this case, you can implement a revenue contingency instead of implement a cash basis accounting for the revenue. Another alternative to setting up a secondary ledger for cash basis with a custom cash basic accounting method would be to set up a secondary ledger with a data conversion level of adjustment only instead of created from subledger accounting. This type of ledger provides an incomplete accounting representation holding only adjustments, which can be manual journal adjustment entries. The chart of accounts, accounting calendar, currency must be the same as the primary ledger. For example, that the delivered integrations from accounts payable invoices to fixed assets require the invoice to be accounted in the primary ledger before the invoice can be sent to fixed assets in the create mass addition process. For cash basis accounting, the entries are not recorded until payment, preventing invoices from being selected in the create mass additions process if cash basis accounting was set up as primary ledger. Therefore, it's recommended that cash basis is set up as secondary ledger, so it's not necessary to analyze all business flows within the application. Secondary ledger is an optional ledger linked to primary ledger for the purpose of tracking alternate accounting, in this case cash basis. Secondary ledger should be defined with data conversion rate level of subledger. When you run create accounting process in the primary ledger, the process will create accounting entries for both primary and secondary. It's important to note that a secondary ledger can support a different chart of accounts structure than a primary ledger. It's assumed the chart of accounts structure is the same. Using a different chart of accounts structure in a cash secondary ledger might require different modeling of subledger accounting rules, which is not covered in this video. When an organization requires a cash basis ledger, we recommend the ledger should be set up as a secondary ledger to minimize any effects of the primary business flows. Understanding of accounting methods or SLA methods are a group of rules that used by subledger accounting engine to determine how to create journal entries from transactions and set up data. A SLAM is a group of subledger journal entries rule sets. Subledger journals entry rule sets provide the definition of generating a complete journal entry of an accounting event. This facilitates the definition of consistent accounting treatment for each accounting event class and accounting event type for all subledger applications. The accounting method grouping enables a set of subledger journal entries rule set to be assigned collectively to a ledger. So this is SLAM to tell the system how to create the accounting entries. By default, there are standards during define the ledgers, and the system asks you which accounting method you are going to assign to this ledger, either accrual and encumbrance, cash, whatever. This is a standard. In case if you have any customize or whatever, so you can take a copy from the standard Oracle SLA and make your customized one. As we know that Oracle delivers these accounting methods, standard accrual with encumbrance. To configure cash basis accounting by business flow for accounts payables. For cash basis accounting entries, the standard accrual or the standard accrual with encumbrance journals entry rules set can be used as a starting point for cash basis accounting. The rule set can be duplicated, modified to meet your organization's specific requirement. For the accounts payable, the standard accrual with encumbrance and the standard accrual accounting method for accounts payables is made up of the following 9 classes or event classes and rule set. For the credit memo, the standard accrual with encumbrance, credit memo encumbrance accrual basis, accrual credit memo accrual basis, debit memo the same, future debt payment accrual basis, invoices encumbrance accrual, payment accrual, prepayment application accrual the same, prepayment the same, for reconciled payment actual basis the same, refund accrual, and refund accrual basis. Each rule set represents a transaction type and needs to be analyzed for the proper impact on a cash basis. In account payable, the main difference between accrual and cash is what? The event that recognizes the expense. Accrual basis of accounting records the expense open invoice entry, whereas in cash basis, the entry would be recorded upon payment of the invoice to the supplier or party. There are two ways to achieve cash basis in accounts payables. First of thing, create no accounting impact for the invoice by using a clearing account, and create invoice encumbrance journal entries instead of actuals for the invoice. Let's take an example for invoice $1,000 that has a partial payment of $600 as a first installment and second installment of $400. On an accounting basis or accrual basis, the following entries would be made. For the invoice, actuals, account on invoice distribution is debit, liability credit by the total, which is 1,000. For the payment installment 1, AB liability will be debit, 600, cash or cash clearing credit 600. Second installment will be again liability debit, credit cash or cash clearing. This is for accrual basis. For the same is for accrual basis, or this is the following will be for the cash basis. So for the cash basis, the invoice, there is no entry will be there. For the payment installment 1, instead of using able liability, you will using account on invoice distribution and cash or cash clearing credit. And for payment installment 2, the same. This is for the installment 1, this is installment 2, so there is no entry in case of in cash basis. So some public sector organizations that have elected to use encumbrance accounting and budgetary control want to see an invoice encumbrance created open invoice entry. The invoice encumbrance entry is created instead of the actuals and as an additional entry. It doesn't replace the obligation and the commitments that are generated with purchase order and requisitions. The accounting entries for cash basis with invoice encumbrance for a non-matched invoice would be created as follows. Here, for non-matched, actuals, no entries, invoice encumbrance, debit, credit. For the payment, actuals will be debited also account on invoice, credit cash or cash clearing, debit reserve of encumbrance, credit account on invoice distribution. The same for the payment installment 2. This is for what? For non-matched. What about for matched? Accounting entries for cash basis with invoice encumbrance. For matched, as you see here, for actuals there is no entry, the same. For the invoice encumbrance, debit the same, and obligation will be there, reserve for encumbrance, BO distribution account. For the payment installment 1, actuals the same, and invoice encumbrance, reserve, debit, credit account on invoice distribution, and the same this for payment 2. So these tutorials assumes that encumbrance accounting is being usualized and will use the rule set tied to the standard accrual with encumbrance accounting method as the basis for changes. For those organizations that don't want to use encumbrance accounting, use the journal entries rule set tied to the standard accrual accounting method. Changes to the delivered rule set aren't allowed, but the rule set can be duplicated and then changes can be made as required. For the invoice event class, either cash with encumbrance for the invoice. Since the payment entry will be configured to record the expense, the invoice entries should not have a financial impact when cash basis is desired. If cash basis with invoice encumbrance is desired, an invoice encumbrance can be created to record the encumbrance when the invoice is created and liquidate the invoice obligation upon payment. As you see these tables showing an illustration of these accounting entries for the invoice, actuals, clearing, because we said either no impact or assign the same account. For the invoice cash with encumbrance, the same clearing, but invoice encumbrance will be account on the invoice distributions, debit and reserve for encumbrance credit. For an invoice to not have a financial impact, account rule can be created that use the same clearing account for both debit and credit, as you see here. Using a clearing account on the invoice minimizes the number of changes required for cash basis accounting. It's recommended to use a specific clearing account that is only used for the purposes of cash basis accounting and is not commingled with other transactions that might need to visualize a clearing account. In case of to configure the clearing account for the invoice accounting entries, you have to follow the steps. First of all, add a new account rule with a rule type account combination and set a constant value to the account combination of your choice. As you see here, you will navigate to the account rule. You will debit or edit or take a copy for whatever. This is AB item expense, payables, which is active. Just go to rules and make a value type as a constant and put your clearing account. Then you will duplicate the invoice encumbrance accrual basis journal entry rule set. Update also the account combination rule to the new account rule created in the previous step to the liability and item expense. There are several liability rules in the invoice journal entry. In this environment, the automatic offset option, if you have a several liability, you have to use offset options. As you see here, EB invoice encumbrance cash to the clear, the payables, this is encumbrance. Again, you have to go to credit, liability with automatic offset or whatever, and assign the rule which you created before, which is assigned to our clearing account, and also for the debit item expense. So this is for edit subledger journal entry rule set and the previous to create the account rule. So once you did that in case of we using our aerial example that 1000 invoice entries, cash basis will now debit and credit to the same account defined as a clearing account. In case of you create our invoice in cash basis, you will find actuals the same clearing account which you put it as a rule set. So this is the first step to make there is no any impact of the invoice for the cash basis. What about credit memo, debit memo and prepayment? Again, you have to first duplicate the following journal entry rule set: credit memo encumbrance accrual basis, debit memo encumbrance accrual basis, prepayment accrual basis. Then update the account combination rule for the liability and item expense. The same what you did for the invoice, you will do for credit memo, debit memo, prepayments. Because in case of you implement a cash basis, all of the transaction types of the subledgers, either payables or receivables, will be affected. So you have to make the environment be ready for all of the transaction type, also and the payment to be ready for the cash basis, because you cannot make a cash basis for credit memo and didn't set up the requirement of cash basis for debit memo, prepayment, payment, invoice, and so on. When credit memo and debit memo and prepayment are entered in the application, just like invoices, these transactions type should not have again a financial impact. Credit memo, debit memo, prepayment transactions also need to post to a clearing account. This is the same for the invoice. As you see here, in this case, in the edit subledger journal entry rule set, we will assign whatever the account rule set which you defined before. In this case, you have to define or select first one, credit memo, and assign for credit as a liability and item expense. Assign what? Assign our rule account code combination, which included our clearing account. And also this seventh clause, select the other one for debit memo and another for prepayment. Like whatever you did or completed for invoice, you will do the same for debit memo, credit memo, and prepayment. And also, in case of you create a credit memo or debit memo or prepayment, after you created, you will notice that the accounting entries, also the first two lines, or will be debit and credit for what? For the same clearing account which you assigned to SLA. So now we completed the side of the invoices. Just account rule set and go to update subledgers to select the transaction or event type, either debit memo, credit memo, prepayment, and invoice. For the payment event class, to achieve the debit to the invoice item distribution and the credit to cash or cash clearing open payment, the payables journals entries rule set for payments. Payments accrual basis need to be duplicated and again then update to have the debit side of the entry go to what? Go to invoice distribution account instead of the liability account. Again, subledger journal entries for what? For the payment, just updated for the liability account. This one to be duplicated and updated to have the debit side of the entry to go to invoice distribution account. As you see here, this is debit for item expense to be what? Invoice distribution account. Subledger journal entry rule set for the payment, update or duplicate this item expense, make it invoice distribution account instead of liability account. So again, you have to duplicate payment accrual basis journal entry rule set, name it as a payment cash basis. Okay, in the payment cash basis, delete the debit line to the liability. You will find like this, to liability, deleted, and from here and add a new one with the journal type item expense and account combination rule set to invoice distribution account. Assign the payment class journal entries rule set to your subledger accounting method as SLA. Once you make a payment, this is counting lines of the payment, you will notice that the item expense to what? To the invoice or the account invoice distribution account instead of liability account. Either this is for first installment and for the second installment, because if you remember Ariel, we gave you example for one invoice with $1,000, first installment of 600 here and second installment of 400. The same go to for what? After you update subledger accounting methods and create account rule for the payment event class, it's updated with the invoice distribution account. The other part for the invoice encumbrance, there can be a significant time delay between invoice entry and the payment. To provide visibility in the invoice pending payment, encumbrance can be created when the invoice is entered and liquidated open payment. Once the decision has been made to use invoice encumbrance, the following journal entries rule set need to be configured for encumbrance entries. In some cases, there are delay. Once I make a payment, once I make invoice, it's not required to make a payment. So there is will be delay there. So to provide visibility to the invoices pending payment, encumbrance can be created when invoice is entered. So in this case, the encumbrance will not wait until you make a payment. So in this case, once you make an invoice, and the encumbrance can be created. So once your decision has been made to use this invoice encumbrance, first of all, you have to make configured a rule or encumbrance entries for credit memo encumbrance accrual basis, invoice encumbrance accrual basis, prepayment, debit memo. 4 types of the credit memo, debit memo, prepayment, the same, whatever you did before here for the invoice encumbrance. Failure to set up encumbrance entries for all invoices types might result in payment accounting entries or errors, open accounting generation. Journal line rule will need to be created for each journal entry rule set since the event classes are different. Since the invoice encumbrance is documented, the following images will be focus of the credit memo, but the setup is the same, beyond the different. Whatever you created for credit memo, you will do the same for invoice, for prepayment, for debit memo. Like before, whatever we completed or implemented or configured for invoice, we did the same for credit memo. We just changed the event type from invoice to credit memo, from credit memo to prepayment, from prepayment to debit memo, and by the end we updated the subledger accounting image. As you see here, the setup for the credit memo, journal line rule. This is name, this is short name, this is account payable. Everything just event class is the credit memo. For the conditions is encumbrance accounting option yes, invoice distribution type is recoverable tax. For the advanced options, you just journal line is none, and here accounting or account payable invoice encumbrance. For the accounting attributes assignment, here invoice encumbrance type identifier. Again, you will do the same for debit memo, for prepayment, for invoice. After that, you will add or edit subledger journal entry rule set to add the encumbrance journal line rule to the configured cash basis journal entry rule set for each transaction type, and set the account combination rule to the invoice distribution account. Here, credit memo encumbrance to the clearing, just go to for the debit, whatever journal line rule which we created before, and make here invoice distribution account. This will be done for all credit memo, debit memo, whatever. When credit memo, and this is again this and invoice distribution account, just when credit memo is accounting, the invoice encumbrance will be created with a debit to the invoice distribution account and credit to the defined encumbrance accounting with a type of Oracle or invoice Oracle. The credit memo will still post to actual using clearing account for both debit and credit. Here, as you see, liability and the invoice Oracle which of reserve of encumbrance and account payable. This is after, or this is the credit memo accounting entries once you completed the previous steps for encumbrance. Invoice encumbrance conditions, that this is again you will follow the same, and here account payable for here in the payment. The payment journal rule sets need to be liquidated the encumbrance entries for any associated invoice, credit memo or debit memo. Journal line rules needs to be created to liquidate the invoice encumbrance. Only a single liquidation rules need to be created for all invoices types. As you see here, payment, as again conditions, and here advanced options as a business flow, account payable invoice encumbrance, and accounting attributes for the encumbrance, pay encumbrance type identifier. So a payment is generated for the following two invoices. One invoice for standard, this 100, and the credit memo. So the accounting interest for the payment will be recorded the expense as an actual cost and will create encumbrance liquidation entries to liquidate the invoice encumbrance. As you see here, this is the item expense, and this is cash clearing, and this is reserve for encumbrance, and for the invoice account payables 10 and 10. Regarding the reconciled payment event class, when the account for payment option is set to add payment issue and clearing, the application will create the following accounting entries using either the standard or standard accrual with encumbrance method when and payment is reconciled. Payment reconciled, debit cash clearing, credit cash. For cash basis or cash basis with encumbrance, the interest should not change and no changes to the reconciled payment rule set should be needed. Regarding the remaining event class in account payables, now the payment and the invoice rule set have been modified. For cash basis, the remaining journal line rule set in the payables modules need to be analyzed. For what? For example, bill payables accrual basis, prepayment application accrual basis, refund accrual or accrual basis. Each organization must decide based on their accounting requirements whether the following rule sets should be create an accounting entries for actuals or encumbrances or be dispersed based on their definition of cash basis accounting. So it depends on the organizations that, for example, refund shouldn't require any changes as they have an invoice type of payment request which is included in the invoice class. Typically, public sector organizations don't usualize the prepaid functionality since all transactions on a modified accrual basis are normally expensed. If there is a need to usualize the prepaid functionality, then consider using an expense distribution on the invoice designated as a prepayment instead of the default prepaid account. Then, when the prepayment is paid to the supplier, the prepayment will be expensed appropriately, and when the prepayment is applied, the prepayment applied will post to the clearing account that was defined, which result is no financial impact open application. If this is a full accrual ledger also defined, SLA rules might need to be adjusted so the accrual ledger uses the prepaid account. Future date payment haven't been analyzed for cash basis accounting since public sector organizations don't usualize the future date payment functionality. If that functionality will be usualized, analyze the entries and adjust the journal line rules to achieve the desired cash basis results. So by the end, you have to depends on the decide, or the organization must decide whatever the requirement. So you have to analyze the entries and adjust journal line rules and to achieve and the desired cash basis results depends on your organization requirement. Thanks for watching.